Good evening and welcome to Transcontinental Times, to your favorite entrepreneurship show, Smart Entrepreneurship Decoded. Every week we meet some wonderful people who provide us insights to make our own journey in entrepreneurship a little faster, a little accelerated, a little wiser, and a little smarter. I receive dozens of pitches every week, just as other investors do. And I also get some very interesting questions. Most of the time, young entrepreneurs are unable to understand a few things. Even forget entrepreneurship, many of us are worried whether the stock market valuations, the way they are heading, is right, or is it a bubble? It's almost cruel, right? The economy is destroyed, people have lost their jobs, people are dying, and the stock market's booming, where less than 1% of Indians participate. A similar phenomena happens in startups. You get these insane valuations. And you start wondering, is it really true, or is this an incestuous relationship between investors and they're trading among themselves without any transparency? Why do I say that? If these VCs are making as much money as they declare sometimes, they also make a lot of losses. I get that. How come in any country, I don't see a VC firm as the top 10 taxpayer in that country? Something doesn't add up. Well, I don't need to decode all this myself. I have an absolutely wonderful, accomplished guest tonight from Jaipur, Mr. Saurabh Sharma. And he has been an entrepreneur, he's an investor, he invests in the stock market, and I think he will help us with a lot of these queries that play up in our minds. Welcome, Saurabh.
Hi, thank you for inviting me, Nalin.
Thanks for joining us. So I know you play in the stock market as well. So tonight, I'm going to take a different approach. Let's talk about the markets first. What's driving this frenzy? Is it people printing money, which is the governments? Is it the big companies capturing market share cruelly almost from the SMEs that are shutting down? Or is it just greed? And so people, the so-called Robin Hood investors jumping in. What's happening?
See, Nalin, it's a combination of all three things. One is definitely the liquidity. Nobody has seen this kind of a liquidity ever. And that too in such a coordinated fashion. So worldwide, there is no central government which is, thinking or indicating to increase the interest rates. So first of all, massive liquidity everywhere. Second, technology segment has been a disruption worldwide. Now they have taken a different trajectory itself, which creating jobs, which creating employments, again generating money for the young, for the companies. Secondly, definitely all these big companies are taking, at least in India, they are definitely taking the market share from the smaller ones. They can have a better interest rate from the banks. They have a better, buying power. So that's definitely playing in. They are cutting off their expenses, which they have been advertising. Now they are shifting to digital, so the expenses are less. And thirdly, definitely the retail market scenario has changed. The younger people have come in as investors, as traders, or whatever you can say. So they have jumped in. The retail population who have participated has more than doubled in less than a year. So that's a phenomenon.
No, you're very right. It's like a perfect storm. But like we were discussing before the show, every generation, and we have seen it a couple of times, sees a soul-scarring crash in the market where your capital is wiped out. And even when it bounces back, you don't have the resources to participate in the bounce back. Do you think a bit of caution is in order for the young people playing with their salaries?
Oh, definitely. Now, I know it's almost like a cliche. You go to a YouTube and everybody is kind of giving their bhavishwani saying that this is the last and this is the top. But given the situation, as you rightly said, we have seen the earlier market. So whenever the rise or a fall is absolutely stunning in a very small time, that's one indication that too much money has been pumped in too short a time. First of all, that is what has happened. If you see the last 2000 points being added in Nifty, it is absolutely crazy in such a short time. That's one. Secondly, yes, one of the classic indicators is not there, which is basically saying that your large caps and blue chips are not rising, but your mid caps and small caps are rising. So your here this cycle is slightly different, that even your large caps are like really running like 5-7% a day sometimes, which does not happen at the fag end of a rally. But I think that liquidity cycle, uh, you know US is just on the verge of pulling that plug. Some statement is just going to crumble that whole thing, and it's just that indication which is important, not even actually doing
True.
it. So, and everybody who has made money just needs that, as you rightly said, freed and greed and fear. So that greed has really played out. Now it's a time to play the fear part of it. So, US government saying, just slight indication, then fear will play out, and the people who have made money, they will just cash out.
Well said. I hope our viewers will take that as a caution, especially the first time investors. Let's move a little bit. Indian stock markets automated fairly early and are better regulated than most in the world, without a doubt. So let's accept those valuations for a moment. Let's talk about the startup valuations. Another frenzy, right? Companies,
True.
we may argue they are human behavior changing products, but companies with virtually no revenue, losses after losses, you may argue in the non-digital space, the losses may have been higher, may have taken longer, but fueled by money and people feeling pride that these are Indian startups, but they're no longer Indian owned. They're all owned by foreign funds. What's fueling this frenzy? Do we have very few good startups, or what is this great demand for the Indian startups right now? We had this, what, 20 odd unicorns this year? I mean, you forget the number.
See, it's again like liquidity. There is a term called FOMO, fear
Mhm.
of missing out, and fear of missing out has played out in different funds. So, a fund invest, and the other funds see, how funds make money out of other people's money. So the point is that some other fund invested, and they just passed on that baton to the other one, and they got their fees because that's their mandate. Now the other fund really, feels that they missed out that opportunity, and they are not looking at valuation, they are looking at what value that other company got valued, without looking or evaluating from our, you know old age things like a DCF and all that. That's out of window. So we don't even talk about it. And we talk about the burn rates, we talk about the moat, we talk about a very different terms. Now, one factor is this FOMO, and secondly, definitely it's a factor that people start comparing, and sometimes rightly so, saying, see what happened in US, see what happened in China, like a Tencent and all these guys. So it feels like we are just at the starting, at a starting step. I think what they miss out is that we are talking about the same valuation, but still starting out. So when Tencent started out, they never started with that valuation, or
True.
Amazon never started with that valuation. But we have taken their valuation, but we have applied over here at the beginning. Now that's a classic mistake, and I think the lot of funds have gone to the salary earners and said that you should invest like 2 lakhs like SIP into us, and you invest like in 30 startups, and 2 or 3 will really work out well. And when I heard this, I said, this is like really too much. you know uh, all these people who are not into business, but they feel that, how can I participate, working in a company, and can't I just pull out my 2-3 lakhs per month, or whatever, 1 lakh per month, and really be a part of that journey. So I mean, you're right, it's
You
scary.
make some interesting points. Firstly, I'm not a believer in this SIP kind of thing and 2 out of 13, etc. I don't know what else you would do in life with a chance of 2 out of 13. You may as well play in the casino and play the roulette wheel. You may have a better chance, at least
True.
50-50 if you play odd and even. I don't know why you would do this, but there are a class of people doing that. I respect that. FOMO is definitely a big driver, which, if entrepreneurs play it right, and often entrepreneurs don't believe this when I tell them that the pressure on the investor or the fund manager is higher to perform than it is on you.
Yes, yes.
There is no way that guy can make money, and most of them right now do very little spade work, due diligence, etc. They follow a herd mentality. Some company has got a good team. If they are investing, let's go along with them. And a lot of stuff is happening that way. Now, I know you have been an entrepreneur, or are you come from a family of entrepreneurs, etc. In the past, when the Tatas, Birlas, Kirloskars, etc., started out, they were entrepreneurs too, though it was not celebrated like it is celebrated now. Then we had the tech entrepreneurs, the Infosys, Wipros, etc. Is there a reason why, when it comes to angel investments, you see the tech entrepreneurs taking the lead and not the earlier generation ones? Why don't you hear the old traditional houses having funded 100 companies, whereas you hear a Sachin Bansal or Narayan Murthy's fund or a Nandan Nilenkani's fund having gone down that path? Is there a understanding issue? Is there a traditional versus modern issue? Why does that happen?
See, I mean, as you know, their families, their generations have believed first of all into manufacturing, setting up plants, heavy capex. You know, the mindset is so there are two things. One is like this, that your mindset is like this, that you know that, until unless you have a capex, you will not have, revenues, and then you work from the point of view of, okay, this much I have to give it to the bank, this much is the profit, and this much is, then you said, okay, this is a profit, and you kind of grow. Now, how can a builder especially can go for investing into Zomato, because he see nothing of it? He How can he invest into Zomato when Zomato valuation is more than the combined hotel industry, the listed entity of Indian hotel industry? So you really can't imagine that. So that's one. And secondly, sometimes rightly so, because these guys have done their businesses not for 2 3 years. They have done it, they have built it through generations. So what they believe is, with those lofty valuations, get into this, and with so much of a risk attached to it, they are not the risky guys in that form. I mean, their risk is very guarded. They when they risk it out, I mean, their ratio, like a stock market, when we put a stop loss to any trade in trading, they have like maybe 4:1. Like, if it performs, it has to perform 4 times. Okay, loss maybe 1 time. So this is the kind of a guard they play with, and that guard right now with this lofty valuation is not that comfortable.
So, talk to me about your own investment philosophy when it comes to startups, and then cover the stock market as well. But in startups, which are the areas that you are looking at or have looked at in the recent past?
Okay, I basically have majorly invested into healthcare. I've invested into some 7 startups, and my way of investing into startup is a little bit different. I would like the healthcare companies to be evaluated thoroughly, meet everybody, and then would like to evaluate into 3 categories. One, a healthcare company which is up and running, making the profits. It's not even startup, but in a smaller way, where I feel that, I can definitely beat my other asset
So,
class
scale
returns.
up. So, you invest for
Yeah,
the scale up.
yeah, that's the scale up part of it, which is
Mhm.
well established, where I try to use my, my connections or my understanding of it a little bit, because this company is anyway established and running. Healthcare, they basically trying to see that their infra, their networking, how they can really expand in moving into other related fields, and make more money out of it. That's one. Secondly, I see that wherever I can participate myself directly. Now, this may not be the the traditional way of just investing as an investor, but I see how I can contribute in terms of, really, I almost invest in the second part as a seed investor. So, maybe two guys are there on just the drawing board of it, and I am sitting with them and, starting everything, like trying to guide them how to, move legally, how to move from the accounting point of view of everything. That's where I really want to get involved, where I feel that if I move them to a particular level, from there they can, take care of themselves. So a couple of companies I invested, Jaipur based companies, they are like very simple business, because I understood just in one line saying, we are the guys, we move product from a stockist to a retailer. That is what they do in pharmacy. That is it. So that was one startup where I invested, and I exited recently partly, and they got funded twice after that. uh, that's one. So what I looked up, I definitely meet people twice, thrice, four times, because my philosophy is that 60% of your money is about people who are running the show. Because
Sure.
why? Because though it's a very cliched thing, but it's a fact. Why? Because tomorrow you find that Amazon wants to enter into delivery, and your whole models and aspirations just go because Amazon is entering. Because, but if you invest into right people, they have the patience, they have mindset that, okay, now just because Amazon invested, how can I make money, how can I tweak my model and not just give up like this. So, I mean, there are a lot of factors which I have seen that investing in the right people is, I think, 60-70% of a startup. Because you as an investor has anyway evaluated the idea, anyway thought of that how big the idea, how it can be scaled up, how you can use your connect to introduce this company to the right people, to right vendors or somewhere. But you need to know that, as in any business, how the cycle moves up and down, how this guy is going to react or how this team is going to react. Are they, because startups normally are the young people guy, and they may react very, another company comes in the same business and they just, hold your hand that I think, we can't do it. So that's
So,
possible.
so if I may say, so you are a person who invests in the scale up. You ultimately invest in the people, and you are a hands-on investor, strategically involved.
Yes.
But take a step back. You probably get a lot of pitches, a lot of things thrown at you on a routine basis. What makes you speak to a guy the second time? What is it that you look for? What is that first thing that gives you, okay, I want to talk to him some more?
Okay. First is definitely the pitch book. I mean, they say, a lot of times in the LinkedIn, you will get this thing that I have an idea, and without even explaining what the idea is. Or sometimes people are direct saying, I'm looking for money. So you know that, you know, he's not even pitching the idea. He's not talking about what his passion or what he got like really interested in. He's talking that, I need money. First of all, that's out for me. Then it comes that, okay, uh, when I look at the pitch, first of all I see that how thorough the person is, how thorough in this short 7-10 slides, how thorough is able to complete, our old thing, like talking about the competition, talking about the market, talking about why he can do it. Because people
Knowledge.
normally, yeah, people normally forget about why they are fit. The businesses are great anyway, but why you will make it better is that part which normally people tend to forget. They talk about how big is the business opportunity, and how it will move up and things like that. Why you can do it, you tell me that. Why the other person is not able to do it? Because the ideas generally are not unique ones. The ideas are generally which are there in the air, and a lot of
Yeah.
people at different locations are thinking about it, some are doing about it, or some have already done it. So it's like, still, why you can do it? If that is something coming clearly to me in 7 to 8 slides, I will kind of ask him to give me a call.
That's an interesting point. I keep telling people that the first thing that I look for, I'm a big believer that ultimately you invest in people. What I'm looking for is, why are you doing this? Among all the other things in life you could have done, including become a preacher, politician, whatever, why are you doing this? And for
Yeah.
me, that is at the core. What is driving this person? And I pay a lot of attention on that. Now, for all the logical things you said and things in the structured manner you approach stuff, you have invested in an astrology startup.
Yes.
What made you do that?
Okay. So
And how has it worked
astrology.
out?
Yeah, so astrology is one tangent that, first of all, this is a general thing which you first of all disbelieve as a normal person, saying that astrology doesn't work. So then somebody sees your astrology chart and he tells you certain things, and then you say, oh wow, it works. Now then comes the third stage. It says that okay, it works, but I'm not interested in investing into something which works on a one person basis. He sits with one person, tells something and earn money. So that's not a startup, that's not scalable model. So what else can be done? So there came an opportunity where the person was not just an astrologer, he was MBA, he was IT graduate, and he ran a business for 15 years. And then he got really keenly interested into astrology, and then he approached Vedic astrology from the point of view of artificial intelligence. So his team was a bunch of IITians, and they were crunching data. So they were crunching data from the point of view of that, if somebody has to say that, okay, what will I become? If a kid is asking and he wants to know that what's my thing. So not only based on his astrology charts and thing, he's trying to connect those modules with the AI data, the huge data which he has collected from worldwide, and saying famous doctors, famous this. So going back and connecting it with the charts, and then forming something, and then obviously checking it up with the actual data, saying that what is the accuracy level. So these astrology questions, some 20-30 questions when I will get married, so the popular ones which pays money. So he mirrored those things with those 20-30 questions. And some of them, they have got enough data to really improve the their success rate. So they are just getting there because a lot of data need to be crunched, and that data was not that available. But I'm pretty excited because it's completely a different field, and this is the field which is searched second highest in the world after porn. So it has the market.
Couldn't agree with you more, because I practice it myself on a small scale. Let's talk about, the investments you've spoken about are almost semi-traditional. You spoke about supply chain, you spoke about pharmacy, you spoke about astrology as well, but AI enabled. Each one of these technologies, when they come, it takes time to pay out, right? People were excited about SaaS 20 years ago. It's just about paying off for them. Now, there's a great degree of frenzy about electric vehicles right now. Every Tom, Dick, and Harry sitting in Oakla is assembling batteries from China, from here, from there. And there's so many players that it's hard to make out. Do you think we are going to see a shakeout, burnout, a dip before it actually happens? Is it 5, 10 years away, the adoption? I mean, somehow the reality and the hype doesn't seem to add up.
See, the point is every industry starts with that hype, then it catches the attention of the people. And then what happens is a certain segment of industries which are not having a great ROI, like all these utility companies, like a Tata Power has been sitting at, the assets where my state electricity board is not paying and all that, suddenly say that we are going to make a electric vehicle infrastructure. Now it becomes sexy. So all of a sudden, what I'm trying to if I raise the money, I am basically saying that I raise the money at this rate, and then this is my rate of return. It's a very flimsy one, and I work as a utility old boring company. So now, one is that these companies, even knowing very fully that my ROI and ROE is you know many years away, will still jump into it because they will still be better off from what they're getting now. So for them, it's any a leg up rather than a leg down. So they can raise funds at a better rate. They can be more exciting company and all that. That's one part of the chapter, because the infrastructure is the missing part in all that EV part. You can set up everything, but you don't have an infra. So these are the companies which are stepping up, and obviously government supporting, and two-wheeler, obviously, as you know, will be the first of in the market, and that will be really try to have the 10% of the market in like maybe 3 years time. Looks like Ola is saying 10 million and all that kind of stuff. But I think one thing has already happened. Your electric rickshaw is a success in certain markets. So
True.
you have a kind of a template which says that if your economies of scale, and running a rickshaw for is more electrical rickshaw is more profitable than the traditional ones, people are going to shift. And that is exactly these scooters are aiming for. So some of them are aiming 230 kilometers per battery change. Now if that happens, and with subsidy, my running rate is like less than 3 kilometers, 3 rupees per kilometer, people are going to shift. People are not going to be, I'm loyal to Bajaj or loyal to TVS. In that category, it will not happen. So that shift will definitely happen. Given that there are enough funding for the infrastructure to be created and enough subsidy by the government to be given to the two-wheelers. But I think from a startup perspective, one should only focus, or I would like to focus, and in fact, I'm searching for a company who is into the software part of these EVs. That's it. I'm not interested in the capex part story of the EVs. I am interested in who are the guys who are providing the updation of a software of these 1 lakh mobiles. It's not there in the two-wheelers right now. In Tesla it is, right? So it's going to come up as an upgrade or something. So who are the companies who are doing this? So one should try and find these kind of companies and get into it. They will be the real winners, because they are the B2B guys. They are not concerned Ola works or the other works. So one of them works, it's good for them.
Okay, we are coming to the end of the show. So here's my final question. The routine entrepreneur does not have the high-end exceptions like a 20-year track record, a patented product, a life-changing, a life-altering product, a human behavior-changing product. He doesn't have all that. He starts a company. What advice do you give them about at what point should they seek funding?
I mean, they should seek funding once they've already exhausted every other opportunity from themselves, their friends, families. It's a traditional way, but it's the right way. Why? Because you are seeking funds from a professional VC fund and all that puts a lot of pressure. You don't want to go there because their most of the times their aim is not aligned with yours. So you don't want to get there in the beginning, until unless you are saying I want to set up an electric vehicle factory. So you don't want to invest your money, and you are basically looking for somebody who's more excited than you and more willing to pay you more money than what you are expecting. Then it's a different story. But otherwise, you need to have a clear visibility of making that your company viable to an extent. You should you should have your things running. At least the operational OPEX should be covered. I do not believe in saying that let me burn more cash and really expand. But at a smaller level, you should be able to cover OPEX and say that, hey, I am able to cover OPEX by this, and now expand, and this is my growth capital. I think that is the time when you should seek the external money.
Saurabh, it's been an absolute delight speaking to you because you have been clear, crisp, no going around beating around the bush for the answers. I had great fun speaking with you. Have a great portfolio. May your portfolio flourish. All the very best. Have a good night. Thank you very much for coming on the show.
Thank you, Nalin. Thanks a lot for inviting me.
Thank
Bye.
you. Bye.
Bye.